During a recent roundtable discussion held during a G20 summit, top economic officials pressed for tighter international coordination of cryptocurrency rules. Georgieva, managing director of the International Monetary Fund, argued against an absolute prohibition by comparing cryptocurrency to water. You try to plug it from one side, it will find some hole and came out. The creation of international crypto regulation, according to top US Treasury official Shambaugh, won't normalize the sector's catastrophes just as enforcing seat belts didn't regulate auto accidents, he stated at the same conference. As the G20's current president, India hosted the roundtable, which adhered to Toughen House regulations and was thus off limits to the media. The comments contributed to a sentiment that stalled one part of India's plans, putting forward its own presidency note on crypto. The note was intended to reflect a roadmap for crypto regulation and show an appreciation of India's role in shaping it. India's intentions were verified by local reporting, but other G20 members resisted and demanded adjustments. They said that because India is a G20 president at the moment, it speaks for the group as a whole and that everything it does should be a result of member discussion. An anticipated synthesis paper, which will be created by the IMF and Financial Stability Board, was mentioned by India in its presidential note as being due by the end of August. The report will concentrate on the global macroeconomic consequences for crypto and it's anticipated to contain suggestions from other standard-setting groups as well as the letter from India's presidency. It is even possible that Indian Prime Minister Narendra Modi will tout the creation of global crypto rules under India's presidency during his address at the G20 Leaders Summit.
Crypto miners are trying to establish a new voice in US policy, starting up the Digital Energy Council to lobby for friendly policy as regulators and Congress are wrestling with the next steps in crypto regulation. The member group will be advocating for policies that promote responsible and sustainable energy development, grid resilience, maintain United States competitiveness, and protect national security, it said in a Tuesday statement. The miners are already in a difficult position with President Joe Biden's White House, which has been calling for a punitive 30% excise tax on mining operations for the harms they impose on society. Miners have also been facing steady criticism for Democratic lawyers who say that the companies threaten the environment. To focus on how both digital asset mining and energy industries can collaborate and work together to bolster energy infrastructure, increase resilience and support energy sustainability and efficiency has been lost in the policy conversations, said Tom Mapes, the new organization's founder and president, who worked on energy policy at the Chamber of Digital Commerce, a wider crypto advocacy group. Mapes, who had also served as a chief of staff in the US Department of Energy's Office of International Affairs, said in a statement that it's important that energy and digital asset mining communities, both key stakeholders in our nation's grid, have a real voice at the federal level. Politics is a team sport, and the broader our coalition and the more dedicated the efforts, the better, Zach Bradford, CEO of CleanSpark, said in an emailed statement.
The US Federal Deposit Insurance Corporation has added crypto as one of 5 broad categories this year in its annual risk report, an indicator of the dangers the banking regulator considers a top priority at the moment. The 2023 risk review, which mostly looked back at crypto's turbulent 2022, says the agency is prepared to engage in robust supervisory discussions with the depository institutions it oversees. As warranted, the FDIC will issue additional statements related to engagement by banking organizations in crypto asset-related activities, it said. The report makes no new policy and it adds to the consistent view from US banking agencies, including the Office of the Comptroller of the Currency and the Federal Reserve, that banks should mostly keep their distance from digital assets unless their federal regulators are comfortable with the specific activity. Last week, the Fed announced a new supervisory program that would include crypto oversight for the bank holding companies it oversees. Several crypto-friendly banks collapsed earlier this year, including Silvergate, Signature, and Silicon Valley Bank, the latter of which became the third largest bank collapse in US history. That's all in Web3 Diaries for now. This is me, Ruchi Sharma, signing off. Do like, share, and subscribe to 3.TV. And for more information and stories, log on to our website www.3versetv.io or scan the QR code.